Hey, what's up? It's Chris Rowe. If you don't know me, I'm an advocate for the individual investor. I hate how they've been shat upon, frankly. And I've been a money manager since 1995, and I'm known for calling every major market top and bottom since 1995. And I decided to really make myself known on social media now. So I've been kind of lurking in the shadows for a very long time, but I will say that there's a lot of people on social media right now that you should not listen to. They're not money managers, they're not risk managers. They have no experience with this. Crypto happens to be the really cool thing to talk about right now, but I'm going to show you how you can profit from a market that's about to really tank. So this week will be a very basic and easy video to watch because I'm going to give you a way to make money in a declining market using the stock, really put options of a stock that everybody knows the name of the company. It's an old man stock, but I think it's just about to tank, and I'm going to show you how to profit, and that is McDonald's. You've been following me on social media at Chris Rowe Trader, or if you've been reading my articles or you've been watching my web events, then you know that I've been warning about the stock market's weakness. Lately, big institutional investors are dumping stock. So in the spirit of bringing you new, fresh content with every video and not repeating myself and stuff I've already said, this time I'm going to tell you a way that you can either protect yourself or speculate and try to double your money. Whichever one you want to try to do, I'm going to show you how. And the trade that I'm going to show you is good for just 2 weeks, all right? 2 weeks only. You can get out anytime you want to, just like a stock. That is, you have to get out of this by preferably the morning of Friday, December 31st. That's right, New Year's Eve falls on a Friday this year, and I want you to celebrate with 100% gain, or maybe you'll just celebrate the new year knowing that you had one big winner when the stock market went bust, while everybody else you know was getting their asses handed to them. That'll be a good new year. And as long as you're smart enough to sell it, you will find yourself likely sitting on cash because you will have just sold it when your favorite stocks are temporarily selling on the cheap. Because remember, I think the market tanks from here. I think you can buy a put option that doubles if we have a semi-weak market just for the next 2 weeks. I think the put option can probably triple or more if we have a sharp market correction. And I think that is more likely. I just don't know the exact day that it's going to happen. You could see them unloading stock. And I think that it goes up 50% no matter what happens here, because even if the market goes up, I think McDonald's is going to go lower. Investors who are not protected right now are sort of tiptoeing past this big grizzly bear, and she's enormous right now. Again, bearish trades go up when stocks go lower. So let me take a minute to explain why this is on the top of my mind and quickly review a few of the many reasons why I've been warning investors about this really crappy market. It looks like it's a strong market. And then I'll show you why McDonald's specifically is in my crosshairs. So for the stock market being a sleeping monster of a bear, reason number one, investors are experiencing a false sense of security right now. The large cap stocks, the biggest stocks in the world, the ones that have $10 trillion of value or more, have been dominating the market this year. And it almost feels like the bigger the company is, the better the company's stocks are doing. Trillion-dollar companies like Facebook, Google, Microsoft. So people look at the Dow or they look at the S&P 500 and they think that the market's doing great. But the problem is it's not. When you look under the hood and you look at small cap stocks or mid cap stocks, you can look at the Russell 2000 index, it's a small cap index. It's clearly being pummeled as large investors dump billions of shares on unsuspecting investors, retail investors. I've constantly pointed out throughout my career to my clients, to my followers, that the largest companies are heavily weighted in the major market averages. So if just a few of the biggest companies in the 500 stock index called the S&P 500, if just a few of them are doing well, it's going to look like the market's doing well, even when it's doing terribly like it is right now. The 10 largest components of the S&P 500 are up 50% year to date. So they're making the market look strong. You look at Microsoft, Google, Apple, Nvidia, and Tesla. Those alone account for a third of the S&P 500's gains this year for the whole entire year. Goldman Sachs just pointed out that 5 stocks have accounted for 51% of the S&P's return since the end of April. So if you think about that, it says that the concentration of the gains has narrowed even further in recent times. So it's scary. That's what happens right before a market tanks. Not only is it important to note that the biggest companies have pushed these indexes higher, but also that the small companies are doing poorly. That's important because small cap stocks tend to lead the behavior of large cap stocks. That's because the biggest companies like McDonald's, everybody knows they're not going out of business. You've got old people that own the stock for 8,000 years. They're not going to sell it. They're the last ones to get sold when people are afraid. The small companies are the ones that get sold first. That's why small caps lead large caps. When the troops stop following the generals, trouble looms ahead. So here's a chart of the level of participation that we're seeing in the gains. So stocks participation. This is also known as the New York Stock Exchange BPI. Don't worry about that technical jargon right now. Just know that this is a chart that shows the participation levels of stocks over the last 3 years, and it's going lower and lower, which means fewer and fewer stocks are participating in this bull market. Finally, look at the volume. You see this just about every time we go through a tough time for stocks. Right before the market really tanks, you see this. You see big volume as prices decline. You saw it in 2019, right before this decline. You saw it right before the COVID crash, and you're seeing it right now. Which brings me to McDonald's, MCD. McDonald's is a large cap stock, and it's a member of the worst performing group in the stock market, which is the consumer discretionary sector. And if typically what happens is weak sectors will drag down even the strongest stocks. So if the sector's weak, and McDonald's is one of the last stocks to be sold off, and that's why it's a good play here. The sector's weak, the market's weak. The option is the McDonald's 270 put. It expires the last day of the year. It's trading at 9 as of Friday, and I think it goes up 50% no matter what happens here. So the 270 put, December 31st. I think you'd buy this put option, and I think it doubles even if we have a semi-weak market. But I think the option will triple if we have a sharp market correction, which I think is more likely. I just don't know exactly when. Right around here though. The most important part of this, well, the three most important parts, because risk management is always the most important part of investing, okay? So number one, only invest what you can afford to lose, all right? If the market pushes McDonald's higher, I don't think it will, but if McDonald's goes higher over the next 2 weeks, you're gonna lose some of the money or all the money. Number two, if you're using this to hedge your bullish portfolio of stocks, that's great. I'd only do it with about 3 or 5%. Believe me, that's a lot. If you have 95% bullish positions and 5% in this, and the market goes through a sharp sell-off, you're gonna have a portfolio that has something like 80 to 85% bullish positions and 15 to 20% bearish. And you'll be taking profits on that bearish trade, and you'll wanna put those profits, all that cash, into new bullish positions, probably semiconductor stocks or strong groups like that. So don't forget to sell this. That's the third thing. Don't forget to sell it. The option expires the last day of the year. You can sell it before then if you want to. No matter what, get out by the last day of the year. It expires on December 31st. So if you like this video, don't forget that you can subscribe to this YouTube channel, or you can subscribe to any social media platforms that you like at Chris Rowe Trader, and you'll get more free stuff that can save your financial life. Like this video, please, and ask a question in the comments section and share it. You know, if you share this, you might save a friend. And you can always say that this is not necessarily your opinion. You can let me take all the credit for this. And that's it. I'm Chris Rowe signing off. Thanks for watching.